back to Dukas Copy TV. Now, commodities have lost more than 20% of their value since their February highs. I'm joined today by Max Thiel from AIM, and he's here to tell us a little bit about what he predicts for the outlook for commodities. Thank you very much for joining me today, Max.
Thank you for having me, Jennifer.
No problem. Now, the string of negative economic news that we've had recently, has that had an effect on the outlook for commodities?
Well, it certainly has, and taking one example in particular, if you look at the numbers that China have produced or shown us lately, were rather disappointing, and that definitely can be seen in an impact on the commodity markets, because big economies like China, like also Europe, vast parts of Europe have their problems, no doubt. These things definitely influence the commodities, and also looking into the resources of different types.
Yeah. And firstly, looking at copper. Copper is often seen as something to relate the world economy to because it's used so widely. But that has been falling, the price for it has been falling over the past couple of weeks. What do you think this is due to? And do you think that we will see this to continue?
Very good question. Also, I think copper is, as you mentioned, a very good indice for the worldwide economy in general, as it is very much used, predominantly also in the building and construction side industry. And this is exactly a good example, also mentioned earlier about China, is that there hasn't been that much of new building construction. I mean, the growth of what it has been growing at is definitely not there anymore. And so also countries like Spain, which are big builders historically, and other countries have kind of lost their speed on building new things, and therefore that can be seen as an indicator worldwide. And
for building metals such as copper, would you see it going as low as we saw in the lows of 2009?
You know, we've seen a lot of things these couple of months, last couple of months, which we would have never thought to be seen, so therefore it's never say never, I guess. But I think it's quite unlikely, because the difference is, for example, looking back at 2009 compared to today, that it doesn't come as a surprise. I mean, we are in the middle of the recession. We had market interventions quite severely by the different governments of the countries, and so therefore I think there's a watch on the developments of copper. There's a watch on the developments in the market per se. So therefore, my belief is that there will be regulatively governments stepping into the market to regulate those, and to also save the prices from plunging to those levels.
Yeah, and looking onto oil. Brent oil actually hit an 18-month low last week, and many people, as you were saying before, are blaming slow economic growth in China. Would you agree with this?
Yes, definitely. Yeah. Definitely, but as always, there's not only one answer to that question or to that effect, and it's definitely not only China, although it is a big driver in terms of oil consumption. But also the market is quite fragile in that sense. People in general take their money off the table for risky assets, and so also numbers like the Chinese, numbers like the US, and also India, for example, have been quite impacting for the oil price, because people don't see the growth at that level, and so therefore they think that there's there's too little demand for the amount of crude oil that's on the market at the moment. So therefore people expect the prices to drop. With that said, is that Saudi Arabia, as the biggest exporter of crude oil worldwide, didn't mention or didn't come out with a public announcement yet saying that they would reduce their levels of output, because the OPEC basically just defined their level of output for the year. So therefore we're in a bit of a uncertain phase at the moment with the crude oil price, and it's interesting to see what's going to happen.
Not all bearish though on commodities last week, as we saw a gain for corn futures. What were the reasons behind this?
Corn is a very interesting example. Again, it's a bit of a different type of commodity, soft commodity, foodstuff. The reason for the corn was that there was basically the output of the industry was lower than expected, so therefore the demand is higher. As always, the price rises. So that is why it's a bit decorrelated to the rest of the other commodities we mentioned earlier.
I see. And lastly, do you think that the negative outlook for commodities will have an effect on emerging markets?
Interesting question. Yes, it will definitely have. Again, what I also did mention earlier is that there's no appetite for risky assets, meaning that also emerging markets, investments into emerging markets will decrease. I mean, there's a deleveraging of all of that. So with the outlook and the gloomy outlook of the commodity markets, with the lack of growth in the world economy in general, I think we will definitely see people taking their cash out of these risky assets, and therefore also this commodity outlook does have an impact on the emerging markets.
Thank you, Max, for giving us your insight today and coming into the studio to see us.
Thank you very much.
That's all we've got time for from Dukas Copy Studio today, but make sure you click back to the website for more interviews and updates. But for now, goodbye.